This is a huge moment for Donald Trump, the Republican Party, and frankly, household net worth. Hey everyone, me Kevin here. We gotta pay attention to what's going on in markets because Donald Trump on Friday, and we covered this in a live stream already, but I'll give you a recap, pared back a little bit of his Liberation Day aggressiveness and talked about how certain corporations and countries would be exempted from tariffs, that the targeted tariffs on sectors like the chip sector might get delayed, and that really we'd only be targeting reciprocal tariffs on VAT tariffs and specific countries that we have trade deficits with. That's unclear what kind of reciprocal tariffs and then reciprocal on top of reciprocal tariffs we're going to get with Trump's reaction, but take a look at this chart. This shows you how important right now the stock market's movement is to every single household in America. According to Goldman Sachs, investor allocation to equities is currently at an all-time high. Investors allocate more than half of their financial assets to equities. And if you look at history here, we've actually now surpassed the peak of the 2000 and 2001 dot-com bubble in terms of allocations to equity. That's because it's been relatively easy to make money in the stock market with no effort over the last, well, frankly, about 15 years. Coming out of the great financial crisis, it's basically been straight up. And so has investor allocation and household allocation, while at the same time exposure to bonds or cash has been substantially lower. Now, why this is really important for Trump and not just the economy and households, but is what's going on in the election space, and then of course people's impressions about what's going on with the Atlanta Fed. Quickly on the Atlanta Fed, we already expect this to skyrocket, so I want to be very clear. This Atlanta forecast should skyrocket soon. One of the reasons that it's so low is because of the gold trade adjustments, the imports of gold that we had. And they actually have a whole breakdown on this, that basically it should have never gone this low on the forecast for Q1 GDP, and maybe it should have been around 0.4. So you should expect to see a big move up to about 0.4 right here. We already expect that. But in addition to that, the latest surveys that we got this morning, which we'll cover in just a moment, should also prop up our GDP again. This is especially important for Donald Trump and the Republican Party. I'm just going to use an example here. If you look at Florida's 6th congressional district, they're about to hold an election on April 1st. Kind of a weird date, April Fool's Day, but they got a special election happening here. And Jake Sherman, who's pretty respected on the Hill, argues that, and I like him a lot, I think he's pretty level-headed, and he argues that there's this interesting race disparity that's happening between Democrats and Republicans. And obviously, like, who really cares about Florida 6th? Well, it's not so much that you might care about Florida 6th. It's that there's a shift happening between fundraising for Democrats. Democrats, to in some extent, are a little bit more motivated right now to take Donald Trump's power away in 2026. And this might be why you've got 10x the raising for a Democrat in Florida versus the Republican. And this is typically seen as a secure Republican seat. You know, this is weirdly written over here, but basically what Jake's trying to say is Donald Trump and Republicans won it in a landslide in the 2024 election. And the fact that right now, I think he meant to say, what's it called? This is a district, J.D. Vance and Trump won by 30, not Walz, but whatever. Anyway, this is a district that should be easy for Republicans to win, and it's been very, very red for a very long time. I think the last time you've seen a movement over here was back in like 2012 to the liberal side. And so the point of this is, could this have a broader implication on elections in 26? And the answer is maybe it's an early signal, yes, because it's a response to some of the trade drama that we've seen. Now, one way that Donald Trump can undo some of this drama is by doing exactly what he's doing, paring back some of this tariff uncertainty. Now, it remains to be seen what ends up happening with broader risks to the economy. Remember, we're still in a price cut cycle. Goods companies like Costco, Restoration Hardware, Tesla, car companies, compression coming to the chip market, a lot of disinflation coming, which is good for lower prices for you. But the survey data that we're getting this morning is suggesting, hey, if we can get rid of some of this tariff pain, maybe that's not bad. That means lower prices for you. Not only does it mean lower prices for you, but it potentially also means we could finally go back to growth on some of the survey data that we've been seeing. In fact, surveys this morning, such as the S&P, flash PMIs, they were actually good in the sense that services bounced back to expansion from this dip that we had there in February, where they were talking about services activity stagnating. Now they're just blaming the weather. So these noisy signals so far in the soft data maybe aren't actually rolling over to the hard data, which is good for people like Powell as well. It's also good for Trump and Republicans, because if the economy holds up, then the stock market can hold up. And you can kind of continue to see that strength for Republicans in keeping stability in financial markets. Obviously, when markets are down, just like they are from the beginning of the year to now, it's probably going to lead to Democrats getting an edge in elections. You can somewhat unwind this, not only by unwinding some of this tariff threat and hopefully getting back towards free trade or going to free trade through this negotiation, right? I mean, think about it. Other countries have had taxes on us. And if we can utilize this sort of turmoil to get rid of some of these taxes or tariffs against us, hey, fantastic. Then what we're actually doing is we're not only going back to our POV being free trade, but other countries getting looped back to free trade, which is great. Some form of, NAFTA 3.0, if you will. NAFTA 1, USMCA, and then maybe NAFTA 3.0, except it's like GAFTA, I don't know, Global Free Trade Agreement or something. So this is a good thing. But the data this morning of the flash PMIs wasn't just the flash PMIs that was good. It was also what we saw in the Chicago National Activity Index. Both of these bullish. Both of these took me on a bull-bear scale from about, 2.5 on the more bearish side to about 3.2. That's just sort of my little barometer for letting you kind of know where my head is. Although on Friday, we were talking, hey, this is a good move. This could support a temporary bounce, and it's exactly what we're seeing. In fact, if you look at some of the sticks that we've been watching, which, we talk trade alerts all the time or sort of what's going on in markets in our course live streams, which you could always join with the Meet Kevin membership over at meetkevin.com. It's a bargain of a price. But I want you to see some of the sticks that I'm watching and some of the movement that we've seen in markets, because it's been pretty dang spot on so far today. There are some risks, though, and I want to show you where to watch for those risks. Yes, Chicago manufacturing good. Yes, we've got durable goods coming out on Wednesday that could be a little heartache for folks. But what I'd be watching right now are some of the movements that we've seen here. First of all, look at Tesla. Tesla was gated by 250 for quite a while, gapped up to our 258 line. Now we're a bit in no man's land. There is a risk of a reversion to 260 here. Otherwise, 295 is the next stop. Qs, I'm looking for about 494. Nice gap up this morning off of the 479 level. Great gap up. But we've got to break that 494 to really get this consistent uptrend going. Now, what are the potential risks going forward? All right, there are a few of them. First of all, we still face risks of a slowing job market and also what I call a fading of rallies. This is something we've seen time and time again. Now, in part, it's been because we've seen more aggressive tariff volatility from Trump. But remember what we want. We want tariffs to be removed, and then we want our tax cuts, and then we want more than just the tax renewal of last time, which to some extent we would have, right? No tax on tips, that's a new stimulus. No tax on overtime, that's a new stimulus. No tax on Social Security, that's a new stimulus. Most Social Security money is basically 100% spent on, services, goods and services anyway. So why not? This is fantastic. Those are stimulative tax cuts. And they would help the economy and support the economy, avoid a recession, and avoid the problems of a slowing jobs market and a reduction in growth. This is what we're seeing at companies, this is what we're seeing at earnings calls, and all this tariff drama is just bad. You're adding fuel to an existing fire. We want to put this fire out. But anyway, the margin compression cycle could still happen, and we're almost certainly going to continue to see it here. What I'd like to pay attention to, though, with this allocation to stock markets that we're seeing from households especially, is are we going to fade this rally? Because there are great companies with great valuations out there. You could see a free valuation that I did on a company last night in a private live stream that I did. If you look at the video, you could see the company that I'm talking about. If you look at the video that I posted last night about, I'll read you the title here in just a second. It is, "The Stock Market Correction May Be Over," right? That was the video we did last night. that followed the video that we did on Friday where we said Trump flips on tariffs, buy calls. Oh, wow, surprise, market's up today. But anyway, the stock market correction may be over. If you click on that video, at the top, you'll see a link to a private live stream I did. You're welcome to check that out. I talk about a lot of different things, but I talk about a company that's up like 7% today. And I talk about how great the valuation is right now and how if there's no how I'd like to buy it cheaper, but if there's no recession, it could be a really good deal because it's trading at a great position right now, and I think the company's doing great things. So you can see that live stream for free. It's in the description of that video. But anyway, what we want to watch for now is this rally going to continue to be bought, or are people going to fade this? What that means is people look and say, oh my gosh, I'm finally up on this position again, or okay, I've made some money again. Now I'm going to take some of that risk off the table. I've been waiting for a bounce, and I want to take some risk off the table before potentially, April 2nd or some more hard data rolls over. So I'd be watching very closely for that. And one of the ways we might be able to indicate what's happening is at the end of the day. Well, at the end of the day on Friday, what you actually noticed is we had inflows into the market. This is the NASDAQ 100. You had this darn consolidation here, and then you had this nice inflow right here. This inflow, in my opinion, was institutions saying, oh, this is perfect. Donald Trump is paring back some of the tariff threats that we saw. We talked about this on Friday, but we really didn't get more color on it until this weekend when Bloomberg and the Wall Street Journal went more deep on this. And it led to even more enthusiasm with this massive gap up in the pre-market and the continuation on the day. If at the end of the day we see a big red candlestick, it could be a sign institutions are fading and taking profits. If we see a push to 494, it's bullish. Anyway, that's my take on what's going on in the market today. Thank you so very much for watching, and we'll see y'all in the next one. Also, feel free to check out HouseHack, our non-accredited round over at househack.com. 5% yield, diversification, upside in the stock, in the company. You get downside protection, a lot of cool things. Learn more over at househack.com. Thanks so much for watching. We'll see you soon in the next one. Links below as well. Goodbye and good luck.
Why not advertise these things that you told us here? I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.